Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Jack Henry & Associates Inc. quarterly report. Jack Henry & Associates Inc. offers a wide range of financial technology solutions to connect people and institutions through its various business segments. At the core of its operations are the core segment's information processing platforms for banks and credit unions, which include integrated applications for deposit, loan, and general ledger transactions. The payments segment provides secure payment processing tools and services, including ATM, automated clearinghouse origination, remote deposit capture processing, risk management products, debit and credit card processing, online and mobile bill pay solutions. The complementary segment offers software and hosted platforms for digital banking, treasury, online account opening, fraud/anti-money laundering, lending/deposit solutions. In addition to these services, the company provides specialized financial performance, imaging and payment, information security and risk management, retail delivery, and online and mobile solutions to financial services organizations and corporate entities. Its product offerings include the Silver Lake system for commercial-focused banks, Symmeter for credit unions, CIF 20/20 for parameter-driven systems in banks, and Core Director with point-and-click operation for banks. The company also offers digital products and services under the Banno digital platform, electronic payment solutions, hardware systems, implementation, training and support services, data center solutions, data and transaction processing, software licensing, and related professional services. The stock price of Jack Henry & Associates Inc. has shown no significant changes over the past year, a phenomenon that can be attributed to several factors. One possible reason is that news related to the company's products, partnerships, and financial results are already priced into the stock, making any subsequent announcements less impactful. Another factor contributing to this stability could be other market forces counteracting any potential impact of these news events. Additionally, if investors do not consider a particular piece of news material enough to warrant a substantial movement in the stock price, it may also contribute to the lack of significant changes. Regular quarterly earnings, reports, and product announcements are common occurrences for Jack Henry & Associates Inc., but their individual impact on the stock price might be modest unless they signal a major shift in strategy. Similarly, partnerships and client wins can influence the stock, but their effect often depends on the scale and strategic importance of the collaboration. Analyst ratings and coverage also play a role in influencing the stock price, with smaller adjustments not necessarily pushing the price beyond a 1.17% threshold. Without a detailed financial analysis and granular stock price data for the specified period, it is challenging to pinpoint specific news events that have caused no significant changes over this time. For investors seeking more insight into event-driven stock performance analysis and historical volatility metrics, consulting financial analytics platforms may provide the necessary tools for a more comprehensive understanding of market trends. Jack Henry & Associates, Inc. maintains a market capitalization of $13 billion, broadly in line with the industry peer group. Jack Henry & Associates, Inc. trades at a higher price-to-earnings ratio of 25 times and a higher price-to-book ratio of 5.79 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company maintains a moderate leverage profile, with liabilities making up 30% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline for a company can be identified by examining various factors that influence its financial performance. On one hand, revenue growth is driven by several key areas. Firstly, data processing and hosting revenues within private and public cloud have been significant contributors to growth. Additionally, Jack Henry digital and transaction revenues, card revenue, and faster payments products revenue have also played a crucial role in driving revenue upwards. Furthermore, organic growth in data processing and hosting revenues within private and public cloud has been another important factor. The company's ability to attract new clients and increase processing volumes through migration to the private cloud has also contributed to its revenue growth. Moreover, higher card revenue, due to increased volume and faster payments products, revenue from expanding active users, and new clients have further boosted revenue. On the other hand, there are no identified drivers of revenue decline in the summaries provided. This suggests that the company's focus on growing key areas has been successful in driving revenue upwards, with no significant factors contributing to a decline in revenue. The financial performance of a company underwent significant changes between 2024 and 2025. Net income increased by $26.8 million, or 27%, to reach $124.7 million in 2025, compared to $97.8 million in 2024. This growth was even more pronounced when considering the operating segment, where net income rose by $51.6 million, or 24%, to $268.7 million. The improvement in financial performance can be attributed to various factors. The acquisition of Victor Technologies, Inc., on September 30, 2025, contributed significantly to the increase in net income. Additionally, differences in tax impacts, such as stock-based compensation and investment tax credits, also played a role in the change. Profit margins also saw an upward trend, with operating income margin increasing from 21.5% in 2024 to 25.6% in 2025, while net income margin rose from 17.1% to 21.3%. However, the effective tax rate increased slightly to 24.1% and 24.2% for the 3- and 6-month periods ended December 31, 2025, respectively. The company's financial performance is a positive indicator of its ability to generate cash from its core operations. The net cash from operating activities for the 6 months ended December 31, 2025, was a substantial $273,254. This figure demonstrates that the company is successfully converting its profits into cash, which is essential for meeting its financial obligations and investing in growth opportunities. Furthermore, the operating cash flow for the same period was reported at $244,119. While this figure is slightly lower than the net cash from operating activities, it still indicates a positive trend. The difference between these two figures can be attributed to non-cash items such as depreciation and amortization, which are not included in the operating cash flow calculation. Overall, the company's ability to generate positive operating cash flow suggests that its business model is financially sustainable and capable of delivering returns to stakeholders. This is a reassuring sign for investors and other interested parties, indicating that the company is on a solid footing and well-positioned for future growth. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, the debt level increased significantly from $0 to $20,000, indicating a substantial rise in liabilities. This increase was facilitated by a credit facility that also rose to $20,000. However, despite this initial surge, the debt level appears to be stable around $20,000, with no significant changes noted on other pages. In contrast, interest expenses have seen a notable decline. The company's interest expenses decreased from -$2,780,000 in 2024 to -$1,142,000 in 2025, representing a substantial reduction of $1,638,000. Furthermore, the interest expense decrease is not an isolated incident. It has been consistently reported across multiple pages. For instance, page 24 notes a -63.8% change from the prior year and a -58.9% change for the 3 months ended December 31, 2025. This significant decrease in interest expenses suggests that the company has made efforts to manage its debt effectively, resulting in lower interest payments. The company's performance can be analyzed through its various segments. The core segment stood out as a strong performer, with an 8.4% increase in revenue for the 3 months ended December 31, 2025. This growth was also reflected in the quarter-over-quarter increase of 7.4% in revenue less deconversion revenue and contractual change revenue. On the other hand, some segments struggled to meet expectations. The payments segment failed to provide specific information, making it difficult to assess its performance. Similarly, the corporate and other segment did not have any data provided for the 3 months ended December 31, 2025. However, it's worth noting that this segment had its revenue and cost of revenue transferred to the complementary segment due to better alignment in previous periods. Overall, while some segments showed promise, others remained unclear or underperformed. Further analysis would be necessary to understand the underlying reasons for these discrepancies and identify areas for improvement. Management is emphasizing the importance of client service as the primary competitive advantage that sets the company apart from others. To further enhance this advantage, they aim to increase revenue streams while keeping costs under control in order to expand profit margins. In terms of growth strategy, management plans to regularly introduce new products and services through internal development, strategic acquisitions, and partnerships with other companies. This approach is expected to drive business expansion and improve competitiveness. Financially, the company is optimistic about its position and operations, expecting to meet capital requirements using existing resources and funds generated from ongoing activities. Specifically, they anticipate investing between $80,000 and $90,000 in capital expenditures for fiscal year 2026. Overall, management's outlook suggests a positive trajectory for the company's financial performance and operational efficiency. There is no notable activity in terms of acquisitions or divestitures. The company has not made any significant purchases or sales of assets, businesses, or subsidiaries within the specified period. This suggests a stable and conservative approach to growth and expansion. The company has demonstrated a commitment to returning value to its shareholders through various means. One key aspect of this is the payment of dividends. As per the financial records, the company has indeed paid dividends, with notable amounts being recorded for both the 3 and 6 months ended December 31, 2025. In addition to dividend payments, the company has also engaged in share buybacks. Specifically, a significant amount of $125,237 was allocated towards purchasing treasury stock in 2025. This strategic move not only enhances shareholder value, but also reflects the company's confidence in its financial position and future prospects. That concludes the financial summary for Jack Henry & Associates, Inc. Feel free to comment below, and I will be happy to answer them when possible.